Well, with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey, what's going on, guys? Chris and Jason here with the Private Lenders Podcast. About to get started real quick with the show. One quick thing to mention is that we are having our first in-person event in quite a while here in Columbia, Maryland, not far from our office here, on November 3rd and 4th. If you're interested in checking it out, go to hardmoneymastermindinnercircle.com. Just so you know, there is an application process. We're planning on having about 20 of the top lenders from different parts of the country here to share knowledge, experiences, learn from one another. It's going to be very, very cool. So check it out, hardmoneymastermindinnercircle.com. Okay, cool. Title of the podcast being Show Me the Money. Let me tell you what I mean. This one's not exactly about income, even though the various income streams from this business is something that we talk frequently about because we're very into all of that. This one is about the transactional work of the many different ways in which money needs to move to make this business work. And that goes for us as a lending company. It goes for our borrowers. It goes for title companies. Without moving money in this business of real estate, you're really just sending documents around, right? We're going to break down the different aspects of what we're talking about.
Yeah. So, I mean, let's talk about who has to move money and how money is transacted. So we got us as a private lending company. We have capital investors that are involved in this. You have title companies that are involved in moving money. You have contractors that are involved in moving money. You have borrowers that are involved in moving money. Who am I missing?
You say title companies? You probably did.
Yep.
Yeah. I mean, long story short, whoever's the most efficient and effective at moving money wins. Oh, tenants. There's another one. Tenants too. Okay, let's start breaking it down. We've been chatting about this the past couple of days in the office, and one of our main jobs as a lender is, one, get your money to title on time. There's no purpose in having a loan doc set hit the title company if there's no wire that's going to be showing up, right? Which also requires you to have the money that you need from your capital investors, right? Ours take that very seriously. A lot of them stay in-house. A lot of their funds stay in our escrow account with us, and some of them don't. So it might be in somebody's business account or personal. It could be in their self-directed IRA, for example. That's another one too. IRA custodians, they need to be efficient at moving money. And nothing happens. No deal can close. No seller can get paid. No borrower can acquire a property without that money hitting the right account.
And I think one of the reasons we brought up this topic, or we thought about this topic recently, is like the way that this business works. If you're just starting as a hard money lender or a private lender, or you've been lending out your own money, or you have a full blown out company, however you do it, like speed and efficiency wins. Like, you're not going to do deals if you are transacting like an old school bank, or if you're transacting like business was transacting years ago. Like, speed is a priority. Things have to happen very, 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 very quickly. And there's no reason for these transactions on all sides to not move quickly. You know what I mean? It's, you have a deal, let's go, move forward, get on the phone with your capital investor. If you're out there needing capital from outside parties, if it's not your own, like, time is of the essence. Let's go. Because I can promise you, if you're not moving quick, the title company's not moving quick, whatever, it doesn't matter what party it is on the job. If you're if you're using a contractor to flip a house and they don't move quick enough, like, you're not going to use them on the next project, right? So you got to move as quick as possible and move, just get it done. Like, that's just what it is.
Yeah. And you have to have your systems in place in order to make that happen. Another important one for us as a lender is construction draws, right? People don't want to be waiting around for the lender to give them the construction money. They need to get their contractors paid. They need to keep everything moving along. And we have known that since day one. Like, I remember there's a lender, he's a smaller lender, private guy, he's a one-man shop. when we're getting into the business, and he was kind of the previous generation, he's like, look, as long as you close on time and give them construction money quickly, you're doing 80% of the job, 90% of the job, whatever he said, right? And that's very, very true. So we've always taken that seriously, is that when we get a draw request, we get an inspector out there, we get the report in, and we get that wire to them fast.
Yeah.
We keep all of their wiring instructions and templates inside of our, every minute, every hour counts, right? And as soon as that thing is ready, it's hitting the spreadsheet for that day's draws, and it's going to be entered and approved quickly.
That's a good point, because I remember there were some lenders back in the day that's like, oh yeah, we only review deals on Fridays, or we only do draws on Thursdays, or whatever the case is. Like, time is of the essence. Like, you got to move as quick as possible. You got to prioritize these things, because if you're a real estate investor or renovator and you have to wait like 4 days or a week to get your money, that is a pain in the neck. And a lot of the times it's just because somebody doesn't want to deal with it. You try to put these systems in place of like, oh yeah, to make your life easier. But the process is very, very simple. They go into our website, they fill out our draw request form. It goes to our in-house inspector and our portfolio manager at the same time. And by the end of the day, that better be scheduled for the next day to go out to the property, get that thing in order. So within 24 hours, 48 hours at the worst, they're getting their construction funds. And believe me when I tell you, we get a lot of repeat business and a lot of referrals, because they know they don't have to wait a week to get their money back. They can get it the next day, and then they can keep it moving.
Absolutely. Yeah. Huge part of it. And now, so our clients, our borrowers expect us to move money efficiently, and we have expectations of them as well. So on the borrower side, when it comes to getting to closing on time, like they're bringing a good amount of cash to each closing on any kind of acquisition. That's their responsibility to have that lined up and to get it there by the closing date as well. Everybody's got to play by the same rules, Same thing when it comes to monthly payments. If you agree to a loan, if you agree to a deal, and here's your payment schedule, it's expected by us that payment's going to be in on time, right? Like, they have their responsibilities as well. And also related to construction on their end, like, they need the money from us to get it to the contractor. They need the contractor to be on time with their stuff. Like, it's all very, very, very time oriented, and timing is important. And moving down to title companies on any side of the transaction, buy side, sell side, whatever it may be, they have money to move as well. They have to get it to different parties. They are receiving funds in, like usually from a lender, also from the borrower. They're dispersing funds out, like interest and fees and stuff like that, to us as a lender, to sellers. That's sellers expecting a wire. It's a big deal for them, whatever seller that may be. So they have their responsibilities as well. They have to be on the ball in terms of getting their money where it needs to be.
Yeah. And, this, like you said, the topic, show me the money. And a lot of this is like, show me the money quickly. Like, we're quick. And I think and I said this kind of earlier, like, one of the reasons I think this came up is because we've had a title company that is slower than we would like on a transaction. And we want to move this thing along, right? And it's like, hey, get this taken care of. If not, this deal's not going to close. And like get deals done, because not that there's tons and tons of competition out there in all markets. There's less competition today than there was on the private lending side a few months ago. But point being is, like, if a deal's ready to go, close it. Let's move. Everybody, let's move.
I remember that you learned that like day one in mortgage business, like, get the deal off the street, get it done. Every day that you leave it out there, leave it hanging, is more chance it could go away.
That's right.
And that's what we don't want to happen. Here's another one for you. Speaking of which, and something where I go off sometimes in transactions. Not that I should, but it happens. So if we are expected to hit closing dates, which we do, I can't remember the last time a closing was delayed because of us. Almost never happens. I expect that of other lenders involved in a transaction. Like, for example, a sale or a refi on the other end that's supposed to be paying off by a certain date. Everyone has those expectations. And it's going to be delayed by another lender who needs to close a transaction so that we can get paid off and our client can be out. Like, I don't take too kindly to that, right? To me, that is just 101. That is entry level, hit the closing date. Anything else you want to talk about, your terms, your pricing, your yada, yada, your awesome online software, payment process, whatever it may be, Cool. That's all well and good. Don't miss closing dates. I get personally offended when other lenders miss closing dates because we take it so seriously that we don't. And sometimes I'll fire off an email here and there that I maybe shouldn't, admittedly, and I troll them a little bit for being losers. And that's just how I feel about it. It's important to move the money to be efficient and effective at your job. Other people are depending on it.
And here's the other thing. If you're newer or you're not fully capitalized right now, you don't have to set a closing date, 3 days from now or a week from now. That will obviously, the sooner you can do them, the quicker you'll get additional deals from there. But even deals that fall apart like last minute and they're expecting us to close in the next day, which we certainly have done plenty of times, and we're happy to do that. Like most of the times there's more to the story where you get on the phone with the title company, potentially some attorneys, the seller, whoever, and the brokers, the realtors. And it's like, well, actually, we could probably buy us another few days. Point being is don't set an expectation that you can't commit to. If you don't have full access to some additional capital right now and you need it to close a deal, I would push it back longer than, just to be safe, right? Because the worst thing you can do is tell somebody you're going to do something and you don't do it. So set expectations properly. But as you were ramped up, as you're capitalized, if you're lending out your own money and you're liquid at this point, don't push back something you don't need to. Keep it, get it moving. Obviously give yourself enough time to underwrite it, do all your proper due diligence, prioritize those closings and get them done as quick as possible. And like Chris said, get those things off the street before someone else scoops them up and takes advantage of the deal, especially the really, really good ones.
Yeah, 100%. And here's the feedback that you want to hear at the end of a transaction. And it happens frequently for us, fortunately. You hear from a good borrower, maybe a new one, that I can't believe you guys got this done so quickly. If a borrower's telling a lender that is someone that you're going to hang on to for future transactions for sure. And it does not happen with most of your competition. So if you are good enough and if you move the money efficiently enough to get your borrowers say, wow, I can't believe you got this done so quickly, you're doing great things in private lending.
Yeah.
Yep.
Exactly. And you know what? Even if there's a lot of competition in your market, you'll still be ahead of the game by just being a professional and just doing what you said you're going to do on these and treating it like a business and treating it, and treating your clients with respect, because there's a lot of bad apples in this space, in the hard money lending space, in the private space. People telling people they have capital and they don't. People tell them, oh, they can give them this rate when they can't. Lots of people that are portrayed to be private lenders or hard money lenders that are actually brokers. So, you have a professional, you act professional, you have a professional image, websites, social media platforms, and you create, even if you're a one-man shop, no problem with that as well. You're professional, do what you say, you do good business, it goes a long way. And this whole business is based on referrals and the same real estate investors using you over and over and over and over and over and over. Like I can't say over that many times because that's where businesses had and businesses made over and over, right? I mean, it's literally out of, over 3,000 loans that we've done, 1,500 of them or higher have, or repeat. They keep coming, we do the same things, done 100 loans for a group, lots of groups that we've done 10, 20, 30, 40, 50 loans for. And, after you get ramped up and you start doing that and you provide them good service, it's the lifeblood of the business. It'll just keep coming back and back. And there's no better thing than to get a repeat borrower, because those deals take a lot less time and cost a lot less to bring in the door.
100%. And when you do have those success stories, those quick closings that people are raving about, you take it, you turn it into a content piece, marketing of some sort, so that you can let other potential borrowers know this is how you roll. And same with capital investors. Look at this great deal that we closed efficiently, got a great new client on the roster, and we plan to do more. So like we started at the beginning, if you guys are looking to take this to the next level and want to come work with 20 of the top private lenders from around the country, check out Hard Money Mastermind, innercircle.com. You can schedule a call to learn more, just read through it. And we hope to see you there. And we hope to see you next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show
are only opinions and not legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you'd enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private